What's going on with Bitcoin is evolving faster than society can digest it. After 30, 40, 50 years, you look back and you say, well, of course we should have embraced the fire, the electricity, the wheel, the crude oil, the nuclear. I would say 95% of the decision makers in the finance world still don't really embrace or understand the idea of digital energy. I think when the administration says they want to be a global Bitcoin superpower, they want the finance companies in the United States to lead the way. For every company in the world, in any capital market, they're always better off to buy Bitcoin as their capital asset. Yeah, well, I think the end game is we accumulate $1 trillion worth of Bitcoin, and then we grow that capital by issuing more credit.
All right. Well, we are here with Michael Saylor. Thanks so much for having us in your home. I'm really excited for this conversation. You've said that Bitcoin is hope. You own hope.com. You've made that a resource hub for Bitcoin education. Can you cast the vision of what is the hopeful part of Bitcoin? What's the world you want to live in? What kind of things change for the average person in a Bitcoin standard?
Well, if we look at the history of humanity, what has improved the human condition is technology. And the most formative technology that everybody's familiar with is fire. And fire, once upon a time, was hope. If you didn't have fire, you're going to freeze to death or starve to death. And then over time, other important technologies evolved. After fire, we mastered metals, and there was the Bronze Age, the Iron Age, the Steel Age. You know, the wheel was a pretty important technology. No wheel, no cars. Rockefeller commercialized chemical energy in the form of oil and standardized oil and called this company Standard Oil. And the real significance of oil was the humans got 1/10 of a horsepower. And now the little dinky engine on the back of your small trawler boat is 70 horsepower, which is 700 human beings. And a typical tender could have 1,000 horsepower. And so think about 10,000 people rowing as hard as they can behind a 30-foot boat. And that's what we got when we got oil and when we got internal combustion engines. And so the hope for humanity has always been technology in a new sphere of influence, whether it's automobiles or airplanes or electricity or oil or fire. Bitcoin is hope because Bitcoin represents digital energy. It represents energy in cyberspace. It represents digital property, digital capital, digital gold. But in its most profound setting, it means digital energy, a way to convey energy through time, through space, that is life-affirming for 8 billion people, for 400 million corporations, for millions and millions of institutions, for hundreds of countries, for tens of thousands, if not hundreds of thousands of municipalities. And if I were to say fire is hope, and you were shivering and freezing to death, you would get it. And if I were to say electricity is hope, and you were in New York City trapped on the 98th floor of a skyscraper or trying to get up to the 98th floor of a skyscraper, you would get it. And now when I say Bitcoin is hope, I mean Bitcoin is digital energy. And if you want to send energy at the speed of light from here to halfway around the earth to save the life or solve the problem of another human being or corporation, you're going to need digital energy. And so it represents the next paradigm shift, the next manifestation in the story of energy and the story of human beings harnessing energy in order to improve the quality of their lives.
And so as that transition sort of takes place and we move to a Bitcoin standard, or some people say hyper-Bitcoinization, what sort of signs are you looking for? What signs to watch that indicate like this actually is happening?
Well, I think we're really talking about the integration of digital energy into the civilization. So, you know, what do you want to see? Well, let's start with the basic application of digital energy as capital, digital capital. There's a trend right now for publicly traded companies to recapitalize on Bitcoin. Our company was the first in 2020. Then there were 2 or 3, and then there were 10, and then there were 20, then there were 40. And about a year ago, there were 60. And then about 3 months ago, there were 120. And right now, there's more than 180. And I would expect that one way you know that the world is adopting Bitcoin is we go from 100 to 1,000 to 10,000 to 100,000. You know, as some people have said, one day every company will be a Bitcoin treasury company. So recapitalizing companies on Bitcoin is one measure of adoption. I think another measure of adoption is building support for Bitcoin into software applications. So, right now you have applications that run on iPhones or Android phones like Cash App that have Bitcoin in them. You have wallets that support Bitcoin, but I look forward to the day when Apple builds it into the iPhone, when Google builds it into the Android operating system, when Microsoft builds it into the Microsoft operating systems. And it's either integral to the operating system of every consumer device, or it's integral to the hardware itself, and people start to integrate Bitcoin support into all the hardware devices that propagate throughout the world. And I think that'll be another really, really big sign.
So yeah, you mentioned 5 years in now. 5 years ago, you kind of came onto the scene. No one really knew who you were in Bitcoin. Now, as you mentioned, you're kind of the leader of these Bitcoin treasury companies. Bitcoin for Corporations, we talk to a lot of these executives who are launching a Bitcoin strategy. There's now 14 different countries represented. And a lot of times what I hear is, this so-and-so wants to be the Saylor of, this country. How do you see yourself, I guess, in the space? Do you consider yourself a leader of this movement, so to speak?
I feel like we have a responsibility to set a good example and to support and nurture everybody else in the marketplace. So we've tried new things, we've experimented, and I think we go out of our way to share our learnings. We've sponsored a Bitcoin for Corporations conference ever since we got into this space, and we published our playbook. We've open sourced what we're doing. We publish securities filings explaining exactly what we do, what we've learned. I think it's incumbent upon us to point out what we think works, what doesn't work. There are a lot of ways to approach this, and I think the inspirational part of this movement is that unlike a lot of other industries where there can be a winner and everybody else is a loser, Walmart wins, most retailers lose. Amazon wins and 20,000 retailers lose. Apple wins and 20,000 device manufacturers lose. There's a lot of that. In the Bitcoin ecosystem, everybody can win because we're all aligned with the common value system, and the base asset that we're using is Bitcoin, and there's only going to be 21 million or less. And the network is the Bitcoin network. And so the growth and the success of a Bitcoin treasury company, or even just a company that is holding Bitcoin in its treasury, we could just refer to any normal company that's got some Bitcoin. Any of those corporations adopting Bitcoin to any degree is beneficial to Bitcoin, to the entire network, and to every other company in the movement. So I think it's been very gratifying to see the growth of the industry. We do our part. I think there are a lot of great contributions made by other companies, and every day I read about another company trying a different strategy, and I think we're all learning together. And when companies try something and it works well, I think you'll see adoption. And when companies try things and they're suboptimal, then we'll know not to do that thing. And so it's definitely a team effort.
I want to talk a little bit about some of the FUD or the critics. There's some skeptics out there. Some might call them haters of strategy and kind of the work that you do. Is there a critique or a misunderstanding of your work that kind of stands out?
I think when an airfoil moves faster than the speed of sound, like an airplane goes faster than the speed of sound, it creates a shock wave and a sonic boom. And it's very loud, it's very noisy, it's very turbulent. And what's going on when you're going faster than the speed of sound is you're going faster than the rate at which air can communicate to the air in front of it, right? The molecules in front of your fuselage are not able to communicate to the molecules 100 meters in front of you. So you end up with this sonic boom and massive turbulence and massive noise and chaos. What's going on with Bitcoin is evolving faster than a society can digest it. And so I think you could say this is all consistent. Bitcoin was misunderstood in the year 2011. It was misunderstood by me in the year 2013. It was misunderstood again in 2015, 2017, 2019, 2021. When we first got into the space in 2020, there were people that misunderstood it, and we had massive amount of criticism when our stock was $10 a share. When our stock went to $100 a share, it was massive amount of criticism again. When it crashed to $20 a share, there was still massive criticism. When we had $2 billion of Bitcoin, people were cackling, or $1 billion, saying, oh, you lost $1 billion on this. When we made 100 billion, everybody disappeared and slunk into the shadows. And then a new set of trolls, a new set of critics came out when our market cap went above 100 billion. It's a different set of cynics, a different set of critics, a different set of misconceptions. I think you're going to see the ebb and flow of that set of misconceptions and that anxiety. It'll continue when Bitcoin is 100,000. It'll continue when Bitcoin is 1 million. It'll continue when Bitcoin is 10 million. It'll continue when Bitcoin goes to 20 million. And there's always going to be a new narrative of fear, uncertainty, and doubt. It'll be a different generation. The people that used to laugh and say, oh yeah, you lost $1 billion trading in Bitcoin, they're gone. They disappeared, right? There'll be a new generation of people that say, do you think it makes sense to buy Bitcoin at $1 million a coin? It's going to trade down to 500,000, right? And then there'll be a set of people that will say, you're buying it at 10 million a coin, it's going to trade to 6 million, you moron, you lost so much money. This is how societies deal with new ideas. If you study paradigm shifts, how long did it take to embrace electricity? How long did people thought John D. Rockefeller was crazy for 30 years until he was the richest man in the world. Mm-hmm. And then and at the point that he was the richest man in the world, people thought, well, that trade is done. And that was just when they invented the automobile and he got 10 times richer, right? And so the society doesn't really deal with paradigm shifts that well in near term, but after 30, 40, 50 years, you look back and you say, well, of course we should have embraced the fire, the electricity, the wheel, the crude oil, the nuclear, even nuclear power right now, for example. Nuclear power has only become cool or useful in the last 2 years. Mm-hmm. Okay, so for 50 years, people thought nuclear power was an awful thing. And all of a sudden they woke up and they realized that I guess we need nuclear energy to power the AI data centers to make us super intelligent. And if we don't turn it on, we're going to be slow and stupid. So, if it took them 50 years, by the way, nuclear power is like unlimited, clean, free energy. And they had to fight for 60 years to get people to embrace the idea of unlimited clean energy. It doesn't surprise me that there'll be skeptics about digital energy. They won't get it. Max Planck said, science advances one funeral at a time. And what he meant was the old guard, they will never, ever accept a new idea. Whatever it is, they'll die. They will not accept a new idea. The only way you get people to accept a new idea is you wait for a new generation of decision makers, and the old guard retires and they age out. Or you need a war. And people that don't believe in aircraft, but to start believing in aircraft when the aircraft flies over their city and drops a bomb on their head. And people that don't believe in atomic energy start believing in atomic energy if someone sets off a nuclear warhead in the middle of a war. And so I think that disruptive, profound events like a near-death experience like during COVID, I think that introduces new ideas and new paradigms. That's how we got introduced into this space. It was the war on currency and the war on COVID in 2020 that caused us to open our eyes and embrace the new idea. I would say 95% of the decision makers in the finance world still don't really embrace or understand the idea of digital energy, digital capital, digital money. And I don't think it's a bad thing, because the only way you're going to make 10 to 100x your money is if you pick the right thing and everybody disagrees with you.
Yeah.
If everybody agrees with you and you do the right thing, well, everybody agreed you should buy Amazon in the year 2020 during the lockdowns because it was quite obvious that you needed Amazon during the lockdowns. It's the worst investment of the past 5 years because everybody agreed that it was a good investment, and there's a lesson in that.
Mm-hmm. Yeah. It'd be interesting to see if there's a tipping point where everyone starts to come around, kind of like what you're saying. Sounds like you've seen that too, where skeptics maybe started 5 years ago. Now they're kind of proving them wrong. And a lot of the kind of what you're speaking to is the old guard, the banking industry. What about skepticism within the Bitcoin community specifically? Does any of that surprise you or stand out in particular?
It's a vocal community. There are a lot of opinions. People say Bitcoin is money for enemies. There's been skepticism in the Bitcoin community since before Bitcoin, right? One could argue that Bitcoin was born out of skepticism, right? Mm-hmm. And so it's deep in the ethos and the culture, the idea to question everything, slay your heroes, don't trust, verify. No. Right. So the whole idea of Bitcoin is, don't trust anybody, don't trust any institution. And so if you start asking the question, how do you create an economic protocol where you don't want to trust any of 8 billion people and any of 400 million companies and any government? That's an interesting question. I would say that skepticism has its place. It is motivational. But at some point, it can become, what is the word?
Counterproductive, maybe?
Counterproductive idealism, right? And the truth of the matter is, you do need to trust the company to create the airplane you fly in. You do need to trust the company that creates the car you drive in. You do need to trust the dentist at some point because you can't. And you do need to trust the doctor because you can't take your own appendix out, or at least it's very rare, right? And so at some point you do have to trust something. And I would say, the more evolved way to look at Bitcoin is not that you want to embrace it and never trust anything. The real inspiration and the promise of Bitcoin is once you've embraced it, you have the option to extend and withdraw your trust, from time to time. And if you choose to not trust the government, you can relocate your Bitcoin to a different country. And if you choose to trust a custodian, you can locate your Bitcoin with them. And when you decide to stop trusting them, you can relocate your Bitcoin to any of 100,000 other entities. Or if you go through a period of life when you choose not to trust anyone, you can self-custody. And when you decide you don't trust yourself, you can transfer your custody to another family member, right? And change. So the real power of Bitcoin is optionality. And the reason we have the optionality is because the entire movement was born out of distrust. And so there is a yin and the yang. There is a dialectic here. And you need a healthy degree of skepticism and distrust and cynicism. But once you've created the technology, you're not going to reach your full potential unless you work with other human beings, right? And so ultimately, when you decide that you're going to work with other human beings, either as a trusted custodian or a trusted hardware device manufacturer or a trusted hardware wallet, or you work with another corporation, it's a trusted team of people, whether they, work on your teeth or work on your heart or manufacture the food or provide you with the aircraft, travel you need. At that point, you can reach your full potential, and you do it empowered, with property rights and with economic rights. And the reason that you will be able to trust them is because you have the option to withdraw your trust. All right. So I look at it as the great deterrent. If you think about gold and why gold failed, one reason gold failed is it's so incredibly difficult to custody. And so if you look at in the history of gold, in the 1920s, you had 4 great central bankers, and the central banker in Germany was Schacht, and the central banker in the U.S. was Ben Strong. And the world, was substantially on a gold standard, and the Germans had gold. And the French had gold, and the British had gold, the Americans had gold. But for the most part, the gold was either in London or in New York. The French gold was with the British or the Americans, or the German gold was with the Americans. So there's a famous story where Schacht traveled to New York City, met with the head of the Fed, Ben Strong, and Ben Strong wanted to show him the German gold, took him down into the basement of the New York Fed, and they couldn't find the gold. And of course, the message of the story is this: gold is so difficult to custody, countries couldn't figure out how to, like the entire country of Germany couldn't figure out how to custody their own gold, much less the 100,000 companies in Germany or the 60 million people in Germany. And so the reason gold failed was it was too slow and too difficult to custody, and therefore your property rights were always going to be impaired by a central actor. And, imagine the entire world running on gold-based credit on a gold standard when all the gold in the world was sitting in London and New York City, and most of it was in New York City, and we can say, oh yeah, that's a bearer asset, but not really, because 40 million companies couldn't bear it. 400 million people couldn't bear it, right? And so Bitcoin, it represents the bearer instrument, but it really is practical for an individual to take custody, and it's practical for a company to take custody. And of course, I guess what I counsel to people that are idealists is they don't trust banks and they don't trust companies. But the point that I would make is during the entire gold era, gold was so difficult to handle that no company could custody their gold, and no bank could. If we lived in a world where 40,000 banks were custodians of Bitcoin, you would have evolved from a world where there were like 8 or 6 custodians of Bitcoin custodians of gold in the entire world, right? And so I think that Bitcoin offers a promise of economic integrity, and I don't think we should rail against a bank embracing Bitcoin.
No.
The truth of the matter is, if every country on earth embraced Bitcoin and the countries became the custodians of Bitcoin, and the only thing we accomplished was to have 150 countries custody Bitcoin, that would be more decentralized than the gold standard for hundreds of years, right? That would be it would be an order of magnitude more decentralized than we had under the gold standard. So what we're talking about is a world where if only banks and only governments custody Bitcoin, you would be 100x to 1,000x more decentralized. And if corporations in custody Bitcoin, you would be 10,000 times more decentralized. And of course, in a world where millions of individuals or tens or hundreds of millions of individuals self-custody, you're not like 1, 2, 3, 4 orders of magnitude more decentralized. You're like 6, 7, 8 more orders of magnitude more decentralized. So I tend to focus upon the fact that the worst case for the cynic is 1,000,000 times better than the best case we had 100 years ago, or even the best case we had ever.
Right.
In terms of decentralized monetary integrity.
Yeah, I like that. I mean, staying on kind of a similar topic, the U.S. recently acquired 10% of Intel. There was, of course, a strong response from the community as usual. Do you see any parallels between sort of this equity strategy and the current administration's stated goal of being, a global Bitcoin superpower?
No.
Not parallels.
I think they're totally unrelated.
Okay.
I think when the administration says they want to be a global Bitcoin superpower, they mean they want to encourage banks to bank Bitcoin. They want our banking system to embrace it, to extend loans against it, to offer, yield or credit against it. They want to enable transactions. They want Apple and Google and Meta and Microsoft to support Bitcoin. They want public companies to be able to buy Bitcoin. They want an explosion and expansion of institutional grade Bitcoin custodians. They want favorable tax laws for Bitcoin, favorable security laws for Bitcoin, and they want the finance companies in the United States, whether it's BlackRock or whether it's Coinbase or whether it's Strategy, or whether it's Block, they want the finance companies in the United States to lead the way in digital assets and digital capital and Bitcoin adoption.
Mm-hmm. Yeah, makes sense. One of the criticisms is, through a humanitarian lens, if corporations hold a large share of the Bitcoin, what does that mean for the average person? How do you, avoid crowding out small users?
Well, when we got involved, Bitcoin was trading $9,000 a coin. And today, Bitcoin's $115,000 a coin. And it got that way because our company bought 3%. And BlackRock enabled institutions to buy like 4%. And that means that 93% of the gain, and that's 93% of nearly $2 trillion. So $1.8 trillion went to the individuals that owned the Bitcoin before the corporations got involved. So the individual's not been crowded out. The individual just, if you posit that individuals, were the ones that owned the Bitcoin in the year 2020, then those individuals made $1.8 trillion since the corporations got involved. So the corporations aren't crowding out the individuals. The corporations are making the individuals that believed in Bitcoin insanely wealthy. And now the individuals can decide what do they want to do with that economic power, right? And they'll do whatever. As a practical matter, it seems to me that for our company, if we were to ever get to 5% of the network's going to be at least $1 million a coin. If we were to go beyond it, it's going to 10 million a coin. So when we get to 7% of the network, if we do, and Bitcoin is $10 million a coin, and if BlackRock keeps up with us, that means 85% of the network, right? And you're going to be talking about $200 trillion. So you're going to have $170 trillion that will flow to the individuals. So they're not exactly getting crowded out, right? If anything, what you've got is the corporations are all engines turning the flywheel of the Bitcoin economy. Every single company, every Bitcoin treasury company that capitalizes on Bitcoin is like attaching a motor to the network. And every time that company buys $50 million worth of Bitcoin, they spin that drive shaft one turn. That's one day's natural supply, right? And so the more companies that come on, whether it's BlackRock or whether it's Strategy or whether it's MetaPlanet or whether it's 21 or whether it's BSTR, or, or whether it's similar, whoever it might be, each one of them is firing up a motor. All of the motors are powering up the network. If you're an individual and you believe in Bitcoin, you buy the Bitcoin, you cold storage the Bitcoin, and you let all the companies power up the network. If the companies didn't show up and the network was all individuals, Bitcoin would be trading $5,000 a coin.
No.
And here's the problem. It wouldn't just trade at $5,000 a coin, but the corporations, if they were to choose a different network to power up, if all the companies went to Bitcoin Cash or Litecoin or Ethereum or something else, Bitcoin would max out at 5,000 a coin and it would dwindle down to nothing because the companies would latch on to the next network, and then they would go to every government in China and Russia and Europe and South America and Africa and the US, and all the laws would be modified to benefit the other network and eventually squeeze the Bitcoin network out. So this is a protocol, and you could even say there's a protocol war, and it's a war to determine the future of money. And the war for the future of money is going to be fought and won with money. So in this particular case, it's the people that have the money are the institutional investors, and the people that can organize the money are the corporations. And if you want to win the monetary war, you need the institutions that control all the capital, and you need the corporations to get involved because you need the support of the government. The government can, with a stroke of a pen, right, block 99% of all the capital from flowing into a network, or they can enable it. And so I think the corporations are very important actors in this, right? They're the ones that are going to hire the lobbyists. They're the ones who are going to do the marketing. They're the ones that are going to defend the network and the individual, right, from having their Bitcoin seized, from having their Bitcoin shut down, or from having a 95% tax on the Bitcoin, right? The reason that'll happen is because the corporations are a line of defense. When I think about Bitcoin, I think the miners, are the first line of technical defense. They're defending the network with energy and power. And the Bitcoin treasury companies are the first line of economic defense. They're defending the network with capital, right? And even the Bitcoin exchanges, right, are the first line of defense. Technically, they're the ones that are going to implement the iPhone apps, the Android apps, right, the websites. And you really want very healthy exchanges, healthy treasuries, healthy miners. You want them to get big. You want them to be well capitalized. You want them everywhere in the world, right? The Bitcoin treasury company in Shanghai will lobby for the interest of Bitcoin with the Chinese government, right? You have to speak Chinese. You're going to have to be in Beijing if you're going to fight for Bitcoin. And it won't be the individual. It'll be the corporation, and the better capitalized, the more effective they'll be. So I don't think there's any conflict of interest. It's not a zero-sum game. If the world is going to embrace Bitcoin fully, that means corporations, banks, exchanges, operating companies, cities, states, federal governments, you want them all to embrace Bitcoin. You don't want to leave anybody out, right? And it's the last observation I'll make is, Bitcoin's like speaking English. You know, and if you spoke English and you're an individual and you found out that the most powerful person in the world also spoke English, would you be offended? You know, and if you found out that the people that run the bank that have all the money in the world in it also spoke English and offered websites in English, and if Apple and Google and Meta also offered software that ran in English, you know, would you think, wow, they took my language, I want them to give it back? I don't, you know, if your dentist speaks English and the doctor speaks English and the cab driver speaks English and the pilot speaks English, is that bad for you? I don't think so. I think ultimately you want all of the rich, powerful, influential people, even the ones you disagree with, you want them all to speak your language. You want them to adopt your protocol. But if they're doing something that's bad for you, you want to see it coming and understand that they did it. Right. And so Bitcoin is a protocol. Ultimately, you want everybody to use the protocol. The world's going to be a better place, and you're going to be better for their embrace of the protocol.
Yeah. I think it's really well said and helpful. Thanks for indulging the questions about FUD. Let's pivot a little bit to talk about the Bitcoin treasury companies, this wave of them adopting Bitcoin. You know, we talked a little bit about competition and how it's not a zero-sum game. Still, we're seeing there tends to be some regional kind of disputes and wanting to kind of be the first mover, the competition for capital. What would you say to companies who are kind of in that space where, what would be your encouragement in terms of competition?
Let's start with the basis, the fundamental premise of the industry. Bitcoin is the monetary base of the crypto economy. It is the monetary crypto network. It is digital gold. If you go back 3,000 years, go back and read the Persian expedition by Xenophon. It's about 600 BC-ish. And Xenophon's writing about a bunch of Athenians and Spartans that are mercenaries, and they go into Asia Minor, and then they charge all the way through Babylon to Persia, and they're fighting for, you know, Cyrus against his brother, and Cyrus gets killed, you know, and they have to make their way back to Greece. They have to cross 800 miles of hostile territory, and they fight their way back through 100 tribes. All the tribes speak a different language. They all have a different culture. They all want to kill each other. The Athenians don't trust the Spartans. The Spartans don't trust the Athenians. No one trusts the Persians, right? It's nonstop bloodshed and war. And this is before the Lydian coins. This is before we have coinage. Now, here's the thing that's interesting about the story. The one thing they agree on is they all want to kill each other for gold. They all want gold. Now, why do they want gold? Somehow, 600 BC, everybody agreed that gold was valuable and gold was money, even though they could not agree on their gods, their cultures. They couldn't agree on anything else. But what's fascinating is the book takes it for granted that gold is money. Gold has been valued by thousands and thousands of different cultures, all killing each other, speaking different languages, worshiping different gods, but they're all fighting over gold. And so gold emerged as the primary monetary metal, not silver, not bronze, gold. For 300 years, if you look at the 17th century, the 18th century, the 19th century, even into most of the 20th century, the world revolved around gold-backed credit. Okay, we issued bonds backed by gold. The British bonds, sovereign debt in Britain in 1770 was a gold-backed bond. In the Rothschilds' times, they had gold-backed bonds, right? The French bonds were gold-backed. The German bonds, the Austrian bonds, the Spanish bonds, gold-backed. All of the credit instruments were, to a certain degree, backed by gold, and they would go off the gold standard and back on the gold standard. But this idea of gold-backed credit goes from the 1700s to the 1800s to the 1900s, all the way through 1971. And so we have hundreds and hundreds of years of gold-backed credit instruments. Then we have to wait, and Satoshi invents Bitcoin, and we fight over what is it, and no one can decide. And now, in the year 2025, we have consensus that Bitcoin is digital gold. So on the CNBC, talking heads agree on it. Everyone in the crypto economy agrees Bitcoin is the monetary foundation. It's digital gold. What are the other cryptos? Maybe they're digital silver, maybe they're digital copper, maybe they're digital palladium or digital platinum or digital silicon, but the history of Western civilization isn't based on copper bonds, right? And there was an experiment with silver, but silver bonds didn't really fly. Primarily, we settled upon one metallic monetary network, and now we're settling on one crypto monetary network. So what is a Bitcoin treasury company? Well, there are two profound paradigm shifts. One, Bitcoin, digital capital, right? Digital gold. Never existed before. You could argue that it's only been 9 months since the entire world agreed that Bitcoin was digital gold, okay? That means you can now issue digital gold-backed credit or digital credit. If Bitcoin is digital gold, it's digital capital. And that means that any credit instrument backed by Bitcoin becomes digital credit. What we're talking about, is, if you look at it myopically, you're just thinking, well, how are these companies helping Bitcoin? If you look at it more grandly, the real point is, how are these companies transforming the equity market and the credit market? If I create a company that buys Bitcoin and I accumulate $1 billion of Bitcoin, I have $1 billion of digital capital. What can I do with it? I can issue digital credit. Now, I want you to think about this for a bit. If I had $1 billion of gold, I'm a gold bank, a goldsmith. I have $1 billion of gold. I issue $100 million of gold-backed credit, gold notes. And then they thought, well, why not 500 million? And then they thought, why not $1 billion of gold notes? And you know where the story goes next. They're like, well, why not $2 billion of gold notes? Why not $10 billion? Pretty soon you had $5 of gold-backed credit for $1 of gold, okay? And the entire modern banking system grew out of that issuance of credit, and the credit started from gold. And what was the strongest credit? 1-for-1 backed, right? 1-for-1 backed would be the strongest credit. Okay, so that means $1 billion of Bitcoin could, in theory, be used to issue $1 billion of Bitcoin-backed credit that would be 1-for-1 backed.
Right.
Okay, now, what's that displacing? It's displacing mortgage credit based upon retail houses, residential houses, commercial credit, that's credit based on commercial real estate, a building that's half empty, right? Or it's displacing corporate credit based upon the cash flows of a company. Or it's displacing, fiat credit that's based on the promise of a government to print more credit, right? That is the status quo. And how big is that? Hundreds of trillions of dollars of those 20th century credit instruments. And when you understand Bitcoin Treasury Company, the very compelling business model is I accumulate a bunch of Bitcoin capital through equity. Then I begin to issue credit instruments against it. And those could be bond-like instruments. They could be convertible bond instruments. They could be preferred instruments. They could be convertible preferred instruments. They could be variable floating preferreds. So there are all sorts of types of credit that can be issued against the underlying digital gold. When you issue that credit, you create leverage on the capital. And when you create leverage on the capital, the equity of the company issuing the credit becomes digital equity, and that equity can outperform the Bitcoin. So if I want to create a company that's going to perform 2x Bitcoin, I take the Bitcoin, I issue Bitcoin-backed credit against the Bitcoin. I issue digital credit backed by digital capital. I create digital equity. And the digital equity outperforms the underlying capital asset. Now, that's a profound idea. Who are those companies competing against? Not really each other. What they're competing against is the existing credit instruments in the capital market where they're going to issue credit, or the existing equity instruments in the capital market where they're issuing equity. They're all just using Bitcoin as that leverage or as that base, that monetary base, in order to create better equity and better credit. So, that being the case, you're going to see an explosion of these companies, and if they understand what I just said, if they understand it, then it stands to reason. Let's take Brazil. I create a company, OBTC or Orange Bitcoin in Brazil. They're creating the first pure digital equity in the Brazilian market. And their base is Bitcoin, an asset going up 55% a year in dollars. And they'll be competing against other equities in Brazil that aren't going up 55% a year in dollars, right? Think about a company with a 55% growth rate being launched in Brazil. Is the equity valuable? Sure it is. Who are they competing against? Every company in Brazil, right? And then when they issue credit instruments, they'll be competing against every credit instrument in Brazil. When you go to Japan, Metaplanet is issuing digital equity in Japan. Who are they competing against? Every Japanese company. Bitcoin's growing 55% a year. What's the growth rate of the average Japanese equity? 1/5 that, 1/20th that. Then when they start issuing credit, Meta Yield, they'll be issuing credit, against Japanese credit instruments. The Japanese risk-free rate or the corporate bond rate for yield in Japan is like 50 basis points. If you offer 500 basis points, you are 10 times better than the thing they're issuing. So there's place for monsters, for mega companies, right? Metaplanet, won't just be the most valuable hotel company in the world. They may be the most valuable company in all of Japan, right? They can create, and by the way, they're small compared to us, but the point is they're not competing against us. Right. They're competing against Japanese equity and Japanese credit in the JPY currency, and that's a distinct capital market. That's why it makes sense to launch a Bitcoin company in Sweden, in Norway, in the Netherlands, in France, in the UK, in Brazil, in Japan, in Canada, and the US. Now, having said all that, right, all those capital markets, they're waiting for a mega champion, and the mega ones, the ones that are pure digital credit issuers, they could be 100x. They could be, they're ones you can take a $10 million or a $1 million company to $1 billion to $10 billion to $100 billion. And if it's a big capital market like the UK or Germany or Japan, you can go to $1 trillion, right? That doesn't mean there can't be 10 other companies in Japan that also follow Metaplanet and they all 10x. Because let's take the US. We've issued digital credit instruments in the US. We've issued, $10, $12 billion of convertible bonds. We have about $8 billion outstanding now. We've issued $6 billion or so of preferred credit. What is that compared to the U.S. credit market? The U.S. dollar credit market is, 100 trillion. So 1 trillion is 1%. 100 billion is 0.1%. So what is 10 billion? Yeah. It's a basis point. Okay, so what we're doing is we're not competing against the other Bitcoin treasury companies. We are evangelizing and advocating digital credit, and our move is to digitally transform the credit markets. And if we are 1% successful, we sell $1 trillion of digital credit. Just 1% successful. So what would help us? What would help us is a dozen other companies in the United States also marketing and evangelizing and educating the investors on digital credit, right? We have 100 million retail investors. How many investors, have dollars and want 10% yield instead of 3% yield from their bank? It's a lot, right? Okay, how many of the 100 million people that would prefer a bank account that yields 10% to a bank account that yields 3%? How many of them know about Stretch, STRC? I mean, a lot of people in the Bitcoin community don't even know about Stretch, right? So I give you a bank account backed by Bitcoin that gives you 10%. Well, what would help us? 100 other companies copying that. You're like, well, won't that get crowded? Okay, well, I'm describing kind of a better bank, right? Instead of going to a traditional fiat bank and getting 3 or 2% on your bank account, you go to a Bitcoin Treasury company and you get 10%. A better bank. Well, how many banks were there in 1920? 25,000. Okay, how many banks are there today? 5,000. Okay, so there could be 5,000 Bitcoin Treasury companies in the US. Would it hurt us? No. Would it hurt them? Not really. Not until 50% of all the credit in the world has been digitally transformed to Bitcoin-backed credit. When there's $100 trillion of Bitcoin-backed credit, the Bitcoin ecosystem is hundreds of trillions. There's hundreds or thousands of companies. Who lost? Okay, and I'll give you the answer, by the way, who's going to lose, right? Outside of the Bitcoin ecosystem, 20th century credit issuers, right? People issuing junk credit, under-collateralized, illiquid, low-yielding garbage, right? They're going to find their credit lines will dry up because why would you invest in illiquid garbage that's not collateralized, that gives you 4%, when you can invest in liquid credit that pays double or triple, that's 10x collateralized, right? So weak, antiquated credit issuers will get squeezed out. You can't even name them, right? It's like 4,000 weak regional banks that are selling preferred shares. You don't even know who they are. You can't even name them. They're trading over the counter. The 20th century over the counter market and the weak credit issuers, they will see credit lines. They will get squeezed, not overnight, but over the course of a decade or 2 decades. Within the Bitcoin ecosystem, it's pretty hard to hurt yourself, but if you find a way to get super leveraged on short-term, extremely expensive margin debt, how do you hurt yourself in the Bitcoin ecosystem? I guess you take out a 5-to-1 levered loan from a crypto exchange. So it's not 100% levered, it's 500% levered, and you post your collateral. If you can find a way to do a margin loan super levered, then maybe you hurt yourself. But I don't think public companies will be able to do that. I don't think the market will offer publicly traded Bitcoin treasury companies that kind of leverage. So I think if you stick to convertible bonds with longer duration, or if you go to preferred stocks, or even if you went to junk bonds, as long as they were 4 years or longer duration, you're fine holding Bitcoin. The people in the ecosystem that got hurt the most during the crypto winter were Bitcoin miners. And the reason they got hurt, and the reason many of them were forced into liquidation, is they were taking 12-month and 18-month loans that cost 15%, and they weren't buying Bitcoin. They were buying Bitcoin mining rigs that depreciate 20% a year or 30% a year. If you take a short duration loan and buy an asset that depreciates 30% a year, you're going to have a financial problem. If you take a mid-duration or long-duration loan and buy an asset appreciating 30 to 60% a year, you'll probably be fine. So I think that you would have to be very creative and quite cavalier to hurt yourself as a Bitcoin treasury company in the public market.
Yeah.
You might do it. There'll be a few that will do stupid things, that will be financially irresponsible. But for the most part, you're going to have three categories of Bitcoin treasury companies. You're going to have the pure play digital credit issuers that are laser-like focused. Our company, a Metaplanet, someone like probably a Strive, I'm going to guess. Someone with a lot of equity capital that's going to just sell equity and pure credit, and they're going to be laser-like focused. They're going to 100x or 1,000x. Those are going to be the screaming equity winners. Those are going to be the next Mag 7 stocks, right? Those are companies that can go from $1 billion to $100 billion or to $1 trillion, right? Then you're going to have the strong Bitcoin players. Maybe they're not the single dominant player in their market, but they're strong Bitcoin. They got a lot of stuff going on. They'll 10x, 20x. They'll be good. They'll win, but they won't be the next Mag 7.
Are they issuing credit, or what's kind of that?
They'll be like, companies that are very, they buy a lot of Bitcoin and do some. It's not their laser like 150% focus, but they'll do some, and they'll be strong performers.
Right.
And then you'll have companies that just buy some Bitcoin. And they'll buy some Bitcoin and they'll have another business. Yeah. And over time, the other business may trade sideways, and the Bitcoin will actually support the equity market cap of the company. Yeah. And so they're the ones that can't lose, but because they're not 100% focused on Bitcoin, because they have another business, they have other liabilities, they'll grind up with the S&P and they'll be successful even if their core business doesn't work, right? But they'll still be, low risk. Maybe they'll be 2, 3, 4xer, right? And I think you'll see all of that. And it all comes down to the conviction of the management team and the business model. If you're saying, well, what would I like to be? What you'd like to be is a pure play Bitcoin treasury company that issues equity and issues high quality Bitcoin credit. And you want to own that capital market. You want to be the category killer in the UK, in France, in Brazil, in Norway, in Japan, in the US, in Canada, right? In Germany, in Italy. The home champion is always going to have a home court. The national champion will have a home court advantage. You're going to have tax advantages, issuance advantages, regulatory advantages, marketing advantages, language, cultural advantages, and focus advantage, right? When you get up and you issued the first digital credit instrument in pounds, your smarter web, and you're doing 100-pound perpetual Bitcoin-backed credit in London. Or then you do in euros on the Frankfurt Stock Exchange, right? Or you do it in yen in Tokyo, right? At that point, you're selling the strongest, highest yielding credit instrument in a capital market that's got garbage. Like, go to Switzerland. You know what the yield is for short-term money in Switzerland? It's negative. Okay? You have $10 million, you put it in a Swiss bank, they take money away from you. In fact, the yields are negative out to 4 years on the yield curve. Okay, so the risk-free cost of capital is literally less than zero. A Swiss company with Bitcoin capital selling something that pays you 400 basis points in Swiss francs is offering 4 or 5% more than everything else. And okay, well, there's like $800 billion that's getting eaten. Why wouldn't that capital just start to flow, right? So why couldn't you issue $10 billion of Swiss franc backed credit? Yeah. And if you basically have a cost of funds of 5% in Swiss francs and you're investing in Bitcoin returning 50%, yeah. Think about how fast you can grow that business. You become the greatest Swiss, bank, yeah. Right? You'll become the greatest Swiss financial company in the entire nation, and you do it in a matter of 5 years. So you could become the strategy of Switzerland, except you can do better than us. We got from 600 million to 120 billion or whatever, 110 billion, depending on the day. We got there in 5 years, but we had to learn as we went along. We had to experiment, and we had to go through, 20 different credit, issuances, and we had to discard a lot of stuff. If you were doing it from scratch today, you would just skip the first, 4 years. I would say, like, here, I already give you the answer. You raise equity capital, you buy Bitcoin, you put 100% of it into Bitcoin, and then you sell a Bitcoin-backed money market, a short duration credit instrument that just strips the duration to 1 month, strips the volatility, right? Strips the delta, and just give people 500 basis points more yield than the risk-free rate in the capital market where you're selling the credit. And you could literally have a company with one credit instrument trading publicly and one equity instrument, rinse and repeat, and you're going to grow as fast as you can educate the capital market that you're selling into, right? And you could, in theory, do what we did, but you could do it in half the time or a third of the time. It all comes down to how charismatic is the leader of the company? Are they trusted? Is the brand trusted? Or are they laser-like focused?
Yeah. I love that answer. I think encouraging sort of an abundance mentality is much needed in a world where scarcity sort of dominates. You kind of answered my next question, but I do want to dig into Stretch a little bit. You describe kind of this end game. Is it, building a better bank, you mentioned, is that sort of where you see strategy heading? And right now, this product exists. People can put their money in it. It's a phenomenal asset to the market, but is it just a matter of educating the public that this exists, or how do we continue to evolve?
Yeah, well, I think the end game is we accumulate $1 trillion worth of Bitcoin, and then we grow it 20, 30, Bitcoin appreciates 21% a year in 21 years. And then we grow that capital by issuing more credit. So we're growing faster than 21%. So the end game is get to $1 trillion of collateral growing 30% a year, be issuing $100 billion of credit a year, growing 20, 30% a year. And that credit is yielding 200, 300, 400 basis points more than all of the real estate backed credit, the corporate backed credit, the fiat backed credit, or any other type of credit instrument in the world, right? Mm-hmm. And what's going on there then is you reinvigorate the credit markets. Instead of people having a credit, they're sick in Switzerland, right? Instead of getting zero in Switzerland, if someone is issuing, if half the credit in Switzerland is digital, then the zero goes to 200 or 300 basis points. Mm-hmm. And because it goes to 300 basis points, maybe the risk-free rate goes up and financial repression becomes less common and more difficult, right? You're actually improving the traditional credit markets, and you're offering Bitcoin believers something 3% better. Mm-hmm. Same thing in yen, right? Eventually, instead of trillions of dollars yielding 50 basis points, the average blended yield will go to 300 basis points or 400 basis points, and you return health, and integrity to the credit markets everywhere in the world. And it's done by some combination of Bitcoin treasury companies working in concert with each other, right? The Bitcoin network becomes a multi-$100 trillion network. The amount of digital credit, 10 trillion, 20 trillion, 100 trillion, right? What if there's $100 trillion of digital credit and hundreds, by the way, 100 trillion in digital credit backed by 200 trillion worth of digital capital would be not fractional banking, right? You haven't got to 1-to-1, you're still 2x over collateralized, which would be better than the very best AAA corporate investment grade debt in the United States is like 2.5 times or 2.5 times over collateralized. Yeah. So it's all AAA investment grade, but with more yield and more transparency. So I see the end game as the credit markets are reinvigorated and digitally transformed to be backed by Bitcoin, digital gold, digital capital. And I see the equity markets are reinvigorated because the equity indexes all start to hold these companies, right? We creep into the equity indexes. Metaplanet gets into the equity indexes. And then pretty soon, all these companies in the S&P 500, they all have Bitcoin. And if all these companies have Bitcoin, then the S&P index is substantially got a component of Bitcoin, and Bitcoin's going up 21% a year, right? So companies get healthier, credit gets less risky, yields, your savings account doesn't give you 0% in Switzerland or half a percent in Japan or 2% in Europe or 1. It gives you 6, 7, 8, 10. Right? So I think I think the 20th century banking networks get transformed. The 20th century credit networks get transformed. The 20th century equity capital markets get transformed. Bitcoin becomes the foundation of the 21st century digital credit, digital equity, digital banking, digital capital, digital economy. And Bitcoin treasury companies are the engines, the drivers, the dynamos powering up that network. And, the experimentation is extraordinary. There's a Cambrian explosion of ideas. The way you do it in South America is different than the way you do it in North America. And at some point, Bitcoin will find its way on the balance sheet of insurance companies. And it'll find its way on the balance sheet of actual banks and tech companies, and if you start to reimagine insurance, powered by Bitcoin, it's a different world, right? Better insurance, and reimagining bank accounts powered by Bitcoin. What happens when your bank offers you a money market that's not fiat powered, because the fiat powered money market would pay you 420 basis points right now, but a Bitcoin powered money market would pay you 10.2%, 1,020 basis points right now. So as banking gets reinvigorated and as insurance gets invigorated, and when the Apples and the Googles are, custodying and offering Bitcoin via all their rails, then you've got a digital transformation it's an invigoration, and we start to reach a digital economy which is smarter, faster, stronger, 10x better, 10x more productive, maybe 100x more productive. And the people that are in that economy win. Mm-hmm. And the people that are blocked from that economy look like the North Koreans where their lights go out at night. They get locked off the power grid. Mm-hmm. And hopefully, it'll be such a compelling future that no one will want to be locked off the grid. Right. Your choice is to be smart and fast and strong and rich, or you could be stupid and slow
and broke,
and weak and poor.
Yeah. So do you anticipate in that sort of future strategy being in a position where you might extend Bitcoin credit to institutions, distressed institutions or sovereigns at some point in the future?
Yeah, well, when we sell credit, we don't buy it. Okay, so when you say extend credit, we won't be making a loan to them. We will be offering them our credit instrument. So if you're a nation state and you want 10% yield, you'll buy our credit instead of buying something that yields 3%, right? We will sell the credit, create the credit, right? And I think our view is we want to create, not 10 billion, but 100 billion and then $1 trillion. Mm-hmm. And then trillions of dollars worth of credit backed by digital capital.
We talked a little bit about the different types of treasury companies, the pure plays versus, companies that have a significant operating business. What trends haven't you seen that you're anticipating, or kind of what's the alpha here? What should companies continue to experiment with that you think would be effective?
I think that there's an opportunity for crypto exchanges to be more aggressive adopting a Bitcoin treasury strategy. I think we might see that. I think we could see more adoption from the Geminis of the world, or the Blocks, or the Coinbases of the world, because they're now publicly traded entities in the capital markets. And so you might see something interesting there. I think insurance companies, especially public insurance companies, could start to embrace digital capital. And they have a lot of capital to invest, and so they could move their own balance sheets, or they could start to change the way they operate. I think there are a lot of financial players that are innovative. The Apollos, the BlackRocks, the Blackstones of the world. They're publicly traded, so you would wonder if you're BlackRock and you just had the most successful ETF in history, maybe you might want to hold some Bitcoin on your own balance sheet. Right? And take advantage of that. So I think you'll start to see more interesting credit instruments or equity instruments created by financially sophisticated players in the crypto economy. Mm-hmm. And if it doesn't come from the big players that are established right now, then you'll see the smaller startups, the pure Bitcoin treasury companies, they'll get into space because there's a vacuum. No. Just like Coinbase is filling a vacuum left by traditional banks because the banks don't want to custody Bitcoin, so Coinbase has got the ability to fill it. If the insurance companies or the crypto exchanges don't embrace Bitcoin, well, then you'll see smaller startups like a Strike or something that will embrace it, right? And if you go public and you start to raise a lot of capital, and then you build it into your wallet, or you build it into a credit offering or something, then I think that could be compelling.
Yeah. So as things kind of continue to play out, the game theory is interesting. It's compelling. How do you think about the future when it comes to maybe consolidation or M&A opportunities with Bitcoin treasury companies in a significant drawdown? Is strategy sort of the buyer of last resort in these scenarios?
No, here's what I tell everybody. I expect Bitcoin to go up 29% a year on average for the next 21 years, right? I'm expecting $21 million Bitcoin in 21 years. So I expect Bitcoin to appreciate 21% a year thereafter. The risk-free rate is 29%. If I do nothing, take no risk, if you're in the Bitcoin network, every single investment idea you consider has got to return more than 29%, plus a risk premium, plus another premium for the headache. And even if you did that, there's a diversification discount. And the thing you got to keep in mind, and when you're running a public company, is there is a diversification discount. If people look at my company and they say 100% of the risk and 100% of the return is levered to Bitcoin, it's a very easy business model. You can go to our website, you can crank in the Bitcoin volatility, the Bitcoin ARR, the Bitcoin price, and it spits out the risks, the fair credit spread, everything. It's very simple. You can update it every 15 seconds. If we were to go and buy another company, buy X billion-dollar company that we think was 40% undervalued, now it takes like an hour for someone to figure out whether that's right and wrong, and it takes 10 years for them to know we were right or wrong. Okay, you've just created a diversification discount. You've turned something which was transparent, where I know exactly what I'm getting in 15 seconds, to something where if I believe you after an hour, maybe it's better. But how many ideas do you have that are guaranteed to return 40% a year for the next 20 years?
No.
Like I've never seen a public company that ever did an acquisition that promised 40% return every year for 20 years, right? So when you think about Bitcoin, the right way to think about it is you're a public company, you have $1 billion of capital, you have an option. You could go buy $1 billion of Bitcoin at 1x revenue, and it's growing 55% a year. You can buy something growing 55% a year at 1x revenue.
Right.
And all of your investors already understand it and support it. long term, you can buy something that's going to grow 29% a year, no risk, no integration headache. You can buy something growing nearly 30% a year at 1 times revenue, and all of your investors back it. Right? There's no one holding our equity that doesn't believe in Bitcoin, you see?
Right.
They're all Bitcoin maximalists. So why would you do anything other than do the same acquisition at 1 times revenue of something that's hyper growing monopoly, growing 30% a year? We've done that like 77 times or something, right? So when I look at M&A, I think the perfect M&A partner is Bitcoin. You have a chance to buy the dominant digital monetary network growing 30% a year for the next 20 years with zero risk and keep doing the trade over and over and over again.
Yeah.
Why would you ever do anything else?
Yeah.
Right? And when you do the other thing, you're going to create opacity. You're going to create a diversification discount. Conglomerates normally trade at a discount to their net asset value because people think that was a dilutive transaction. It was a dilutive acquisition. It's distracting. So I think that companies, that there is a place for companies to buy a Bitcoin treasury company trading at less than NAV. It won't be us, right? The world's full of companies that do M&A. There's a lot of people that would rather buy equity. There are private equity investors and there are public companies. They like to buy other companies. That's their business model. By the way, none of those companies are Bitcoin maximalists with 100% of their balance sheet invested in Bitcoin, right? They're not Bitcoin maxis, right? There's a lot of, if you're a fiat maxi or if you're a whatever maximalist, and, you might look and say, hey, I believe in this company and it's trading, I can get the business for free because it's trading at its Bitcoin balance sheet. You'll go buy that company because you feel like you're getting the operating business for free and you're getting the Bitcoin in the mix.
Right.
And that's what will support the value of that company. So I think it makes sense, you buy a retailer losing money, that's valued at its Bitcoin.
Yeah.
They'll get bought by another retailer.
Right.
And the other retailer will be like, I'm going to get rid of the cost and I'm going to rationalize the business and I'm going to strip out the Bitcoin because I see the value in the Bitcoin, but I don't want to be in the retail business, you see?
No.
I don't want to be in a money losing. I don't want to buy a business losing. If the business is trading less than the Bitcoin, it's because the marketplace perceives a liability in the operating business.
Right.
Right? And so I'm buying the world's greatest business in the world, the digital monopoly, growing 29% a year for the next 20 years that all of my investors love. I'm buying that. Why would I want to go buy a bunch of troubled businesses that have problems that I have to solve, and I'm going to be throwing my investors' money to solve the problem? That's not what they want, right? So it doesn't make sense for a pure play to buy another Bitcoin treasury company or to buy another company with Bitcoin. It totally makes sense for a private equity investor or an LBO or another conglomerate. They've got all their own dynamics. They'll do the trade. It will be a benefit to them.
Yep.
It will be a benefit to the Bitcoin treasury company that will, the equity will trade up more, right? And it all just comes down to what is your cost of capital? And if you're a Bitcoin maximalist, your risk-free cost of capital is 29%. If that's what you believe Bitcoin's going up at for the next 20 years, and that's what I believe. Most people don't have a risk-free rate of 29%. There's a lot of a fiat maxi in Switzerland. Their risk-free rate is minus 50 basis points, you see. So other companies will have other cost of capitals and other outlooks because of their frame of reference. They will actually do those transactions.
Well, you just keep buying Bitcoin there. That makes sense. So, does this playbook work in every public market? There's some untapped markets. We haven't seen really anything happen in Africa yet. Where does the most opportunity exist that you see? Is there markets that are being overlooked right now?
Okay, well, for every company in the world in any capital market, they're always better off to buy Bitcoin as their capital asset. If you're in Cuba, but it might be illegal in Cuba, but you're still better off as a Cuban company to capitalize on Bitcoin, right? North Korea might be illegal, but you're still better off, right? So barring the legality of whether you can do it, you're better off in Venezuela and Nigeria, every country in Africa, you're better off to hold the Bitcoin for the obvious reason that it's going up 55% a year, and it's going to go up nearly 30% a year in dollars. And most other capital assets are either collapsing against the dollar. Local credit, local currency is collapsing against the dollar in Africa, right? Or it's pegged to the dollar, right? And so every company should capitalize on Bitcoin. Now, the next question is, if you're a public company investor, where can you create the screaming Metaplanet or strategy return? How do you get a 10x or 100x return on your equity? The most compelling opportunities there are mature, large capital markets suffering from financial repression. So what you'd like to find is a capital market like the Swiss or the Japanese. It's big. There's $1 trillion in it, but the risk-free rate or look at the 1-month government T-bill rate, and when it's 0 or when it's 50 basis points, Bitcoin's giving you 55%. Mm-hmm. You can borrow money at 5%. If you offer 500 basis points more than 0, you borrow 5%, 5.5%, then you've got massive leverage. You're investing at something like 30% over the next 20 years, and you're borrowing at 5%. That means you're capturing 100% of the spread up front, and you're capturing, initially, 80, 85%, and it's compounding to 95% over the decade. So you're capturing 100% on the front end and 90% plus on the back end, and you can generate 4 or 5x leverage, or 50% leverage, or 60 or 70% leverage on your balance sheet. You could do 4x the Bitcoin return, 5, 6, 7x the Bitcoin return. So in theory, a pure play company in one of those markets, in any European Euro market where the risk-free rate's 200 basis points, Switzerland, Japan, those are all great. If the U.S. SOFR rate comes into 200 basis points, that's very bullish for every single U.S. Bitcoin Treasury company, right? Because now you can offer 7% dividend yield, invest in Bitcoin. You'll capture 90% of the back end, 100% of the front end. It's a screaming profitable business for you.
I want to talk a little bit about this narrative of tokenizing the world. It seems to be one that kind of doesn't really go away. What's your take on sort of how this plays out in the Bitcoin ecosystem? What's the next asset that gets tokenized?
Well, I mean, the idea is you'd like to move everything at the speed of light. And so why not tokenize dollars? Why not, even Bitcoin tokenized on the Lightning Network, right? Or tokenized somehow. Everybody wants to move the Bitcoin in a second, then they want to move it in a millisecond, right? So tokenize Bitcoin on a layer 3 would actually have use, right? You can tokenize every stock, every bond, right? BlackRock has tokenized U.S. Treasuries in one of their instruments. And if you tokenized Apple stock or Microsoft stock, then people could take custody of Apple stock in India on Saturday afternoon. Yeah. Okay, so tokenization makes the entire capital markets work more efficiently, more egalitarian, faster, smarter, stronger. And it also provides the power of self-custody or quasi-self-custody, right? It takes you to a point where if you tokenize on a decentralized network, then equities and securities could look more like bearer instruments, right? When you're holding the security at a regulated custodian in New York City and, you're on the sanction list, you lose custody of that, right? So So tokenization could provide a quasi, a higher property right and a higher utility to a lot of financial assets that have value to people. Right now, I think where we're at is there's broad consensus that things should be tokenized. There is support from Atkins at the SEC and Contez at the CFTC, and from the Secretary of the Treasury, Scott Bessent, that, we should lead in digital assets, which means tokenization of all form of assets. We only have one law, the Genius Act, which kind of touches on the tokenization of dollars. But, it goes part way to establish a framework for the tokenization of dollars, but it doesn't fully empower them to be, utilized. I mean, there are a lot of constraints in the Genius Act. Like for example, you can't offer a yield on a tokenized dollar unless you're a bank, right? So there are some constraints, and there are some obligations, but there's also some legitimization in the Genius Act. The Clarity Act is really the next thing up on the docket, which will be the priority this fall, probably for the rest of the year. And there at some point, there'll be some understanding of whether you can or cannot tokenize, but the Clarity Act doesn't fully embrace the idea of digital securities yet. So it's not clear to me whether or not you'll have tokenized securities of stocks and bonds and real world assets codified into law, even after that act. And so there's going to be a gray area about what the law allows you to do. And because there's a bit of a gray zone, that actually creates some ambiguity about what's the right technical approach. For example, if the law said it's okay to tokenize this stuff and move it, peer-to-peer at the speed of light, there's nothing that stops Apple from tokenizing every stock on the Apple Pay network. But because the law doesn't make it clear whether Apple has liability if you transfer, securities between sanctioned individuals in India, right? It kind of is going to slow down Apple, which means that the decentralized networks or quasi-decentralized networks will have an advantage because they could tokenize and they don't need regulatory clarity. And so I think that we're moving toward a world of de facto recognition of digital securities and digital tokens from the SEC and the CFTC, and it'll come through the rules process, but we don't quite have it yet. And I don't know if we'll get in law legitimization or legitimacy for tokenized stocks, bonds, or other crypto tokens, not for a while. So I would say we're in this in-between period where there'll be leadership. Probably the leadership will come from the cabinet. The industry will adopt things. They'll become de facto, standards. And as the de facto standards build, you'll see a lot of capital flow in to these standards. And maybe they'll be codified in law before 2028. Maybe they won't. Maybe there'll be some, controversy over it. I can't say at this point. The only thing that's very clear to me, right, that the greatest regulatory clarity is Bitcoin is a digital commodity, and you can hold it as a store of value, and you can issue digital credit against it. I think a certain lesser clarity is you can create a stable coin if you're a corporation and not pay interest on it. And you can create a stable coin if you're a bank and maybe you can pay, maybe you can tokenize your deposits. There's a little bit of clarity there. And I think the rest is it's a wild west, but it's a wild west in a liberal, progressive political environment where there's support from the White House and the SEC, Treasury, and the CFTC. And 2 years ago, it was a wild west, but in a regressive, cynical, skeptical environment without political support, where the White House, the SEC, the CFTC, and Treasury were against. And so that's where we stand today.
Love that. Michael, that's all the time we have. Thank you so much for having us. Really appreciate the conversation. And thanks for hosting us.
Yeah, my pleasure. All right.